overall, we've had a fantastic recovery the moment it fell. But these corrections and possible impending crash is not over yet. Every single week we seem to have these dips. Previously it was every Wednesday. This week it started on Tuesday. I'm using the algorithm that I usually use to analyze individual stocks with machine learning to determine the optimum price point to buy for the entire stock exchange, the TSX, the NASDAQ, and the New York Stock Exchange. This way I can figure out the best possible timing to buy the dip. You never want to find yourself going all in when you average down a stock. Especially with these corrections, you could average down your stock and then that stock could continue to go down. Best to play it safe. Let the stock find its support, the point where it goes down, finds a baseline, and starts to rebound. That is when you average down. And when you are averaging down, never go all in on an average down. Take 20%, 10% of what you already have in the stock. So if you have 100 shares, buy 20 more shares at this lower price to average down your stock. You never want to be saying, oh, well, if it's at $5 now, it used to be at $10. If I buy 100 stocks here, then my average is $7.50. Because if that stock drops down to $2.50, you're still left at $7.50 average because you have gone all in with the rest of your average down money that you had available in cash. So then it may take much longer for yourself to become profitable again. So what you want to do is watch for these dips, find spots of recovery, and then average in 10 to 20% of what you've already invested and continue to do so as it dips, so then you have a stronger position, and once it finds its final baseline with this larger crash that may be coming, then you can take some or more of your portfolio into those select stocks that you really believe in. But the ideal strategy here is to not get greedy. Take your profits when you have them. If it's 5%, if it's 10%, sell at least half of your stock. Take your profits and average up, so then you never have to worry about not selling that one time that it peaked before the big crash. You want to be selling the moment you have a little bit of a profit. Because if you don't take that profit and it goes up a little bit higher and then you think, oh, well, maybe it'll go up a little higher again. Maybe I'll break even on this one. Maybe I'll get 10%. Maybe I'll get 20. The more you try to go for higher profits, the harder it's going to be to sell when it's low. This is the best performing play for ETFs. If you have a specific market that you are heavily invested in, try to find the best performing ETFs in that market. Then you can use this strategy to buy in on the optimal dip and then make out with more profit off of the ETF than you would trying to bet on any individual stock. As many of these stocks that you are currently seeing heavily promoted may not be in full-fledged production and may not be able to handle the crash and mass sell-off that is causing their price to go down, as many of these investors might not be going back in on a company that is entirely speculation. Investing in an ETF in the sectors that you want to be invested in will allow you to understand the companies that are outperforming the others, and once these corrections are over and once we find the larger crashes, you can look to these individual stocks that you know from the ETF will be rebounding and invest heavily into the stocks that you know will have a strong return once we get to the bottom of this dip, correction, or crash. The best way to be notified of these dips and crashes and figure out the optimal buy opportunity would be to follow me on Patreon. Link is in the description. This is where I give out tips and strategy, as well as we have a Discord that is available once you start signing up. So if you want to join the community and talk with me directly and also get updates on the development of commercializing and getting my algorithms out directly to you guys, then you want to make sure that you follow me over there. The sectors I'm paying attention to for these ETFs are psychedelics, cannabis, real estate, as well as dividends. Starting with Psych, PSYK. Using psilocybin, a component in magic mushrooms, you can open different pathways within the brain in order to help manage and cope and increase neuroplasticity, which allows an individual to revisit memories and recreate positive inferences with those memories to essentially be guided through a positive trip to help sustain the possibility of overcoming negative issues within their past. PSYK has had a phenomenal run since its release, passing double digits only 2 to 3 weeks ago and never dipping back below until yesterday. And I am buying at the ideal price of $10, as many of these stocks like Numi and MindMed will continue to go up over time, and buying this ETF will even out the drops that are associated between those other companies. Next up in the cannabis sector, we have HMMJ, which is a Horizons ETF that has been doing extremely well. It hit as high of up to $18 Canadian, but is now sitting at a low of $12.50. I put this at an ideal buy of $12.45, and it will continue to go up as cannabis rises. As expressed in previous videos, cannabis is set for another boom, with not only a retail push, but a pharmaceutical and medical push for cannabis. For a dividend ETF, my top pick is PDIV. This is Purpose Enhanced Dividend Fund. This focuses on Canadian markets with incredible financial health, as well as exposure to American markets. They do a lot of hard research to find the absolute best companies that are paying strong, consistent dividends. Even if you are not investing in PDIV, I suggest you take a look at PDIV's portfolio to figure out where you should be investing. Of all Canadian dividend ETFs, PDIV's holds the strongest 6.25% yield on a dividend fund. This is one of those active money strategy stocks that I use to place a lot of my profits from day trades and swing trades into PDIV, so I can make sure that they are secure and they're actively building a little bit of money until I can liquidate that fund that has barely changed in its operation, as it sits around $10 with an ideal buy-in of $9.90. CGRE is my top real estate play for ETFs. It only supports a 3.57 dividend yield. However, the growth is fantastic, especially given the recent downturn that will give it to its ideal buy of $21.20. CGRE supports many real estate companies that you may already know: Alexandra Real Estate, Innovation Homes, Duke Realty, and Sun Communities. There is soon to be a lot of opportunity on the market with investors who are looking to expand into real estate. There will be a lot of individuals buying their first homes, buying first rental properties, and these companies will be taking the brunt of this influx of individuals, especially with new families coming in with all of the new COVID babies that may have been created within the last year. Either way, this video is probably too long already, but if you made it this far, I congratulate you. And if you could thank me for keeping your attention this long and hitting a little like button, maybe a subscribe, I would extremely appreciate that. But if you got better things to do, come back later. We'll see if you like me then.